Welcome back. Nvidia hitting an all-time high yet again today. Shares are up nearly 100% in the past year. And today, the street's #1 chip analyst has upgraded shares to outperform. It's our call of the day. The analyst behind the call is Stacy Rasgon of Bernstein. Stacy, welcome back to Halftime. It's good to talk to you today.
Good to be here. Thanks.
I mean, you're pretty contrite in this note today. Obviously, that not growing more positive sooner was an error, you say. You missed 90% or so of this move. Why today, though, for the upgrade? Why was it finally time in your mind to do this?
Yeah, absolutely. So you're right. We've covered the stock for a number of years. We were bullish for most of that time. We downgraded at the beginning of last year on the back of a number of headwinds, cryptocurrency and sort of a lackluster gaming cycle and hyperscalers entering a digestion phase. And I think that downgrade was fine. But again, as I wrote, obviously not growing more constructive, sooner that would have been a better thing to do, and we didn't. So why today? If you look at the stock, at least as of where it was yesterday, it was almost dead on the prior peak, which was October of 2018. You look at what drove the stock, though, when it got to that prior peak, it turned out to be built on kind of a house of cards, right? Gaming was inflated by cryptocurrency, and people were very excited about the Turing gaming cycle, which proved to be a bit of a dud, at least at first. And again, the cloud guys were about to digest, and so data center was going to roll over. You look at where we're standing today, though, with the stock, again, back to that peak, things are much more stable. There's no cryptocurrency in the gaming trajectory. Turing is actually taking a little longer, but Turing actually has a good traction now. We've got a new gaming cycle that's coming, so that looks stronger. Hyperscalers have now gone from a digestion phase back into a build phase. And if this had all been true at the prior peak 16 months ago, I don't think the stock would have gone down. That this was the story back then, it would have still worked. I think we've just sort of pushed it out by 16 months, and so that's where we are today.
So you're making the case that this is a fundamentally driven call and not necessarily just a technical one because the stock is where you said it was.
Oh, absolutely. This has always been, everything we do is try to make it fundamental. And there are some really nice fundamental drivers that are here. Like I said, they've just been kind of delayed because of some of the situation that we had a year and a half ago. I think it's been delayed, but we seem to be back on the right trajectory now.
You have to, I guess, somewhat hope that momentum in and of itself continues to lead the market and the NASDAQ, which hit another record high today, even higher for stocks like this to continue to progress higher. Correct?
Well, that would be true if you were only betting on multiples. I mean, we're hoping that it can hold the multiple, but at the same time, there is a massive amount of earnings power that is here if the revenue trajectory can actually stay on the path that it seems to be on right now. So no, I don't think it's a matter of just hoping that multiples need to keep marching higher. If it can hold the multiple, and I think it can. It's got a great revenue and earnings trajectory that I think it can help take it higher. 360
is your price target, about 15-16% from here. I have one of my investment committee members holds Intel, loves that stock, and wants to ask you a question because apparently you don't. Jim Leventhal is his name, and here he is.
Stacy, listen, I've got your note from January 24th after the recent earnings in front of me, and I think I'm being generous in saying you just don't like this company. It seems like you grudgingly.
It's not personal, it's never.
I got it. But we're on the other side of the trade, so I want to hear your thought process because, look, you're assigning a 10 times multiple at your target price. This to a company that has really great scale, is starting to grow earnings again, actually not starting, has been growing earnings, is shrinking its share count, has a pretty good balance sheet, and really enjoys those economies of scale which matter in this business. So help me out, and I mean it, help me out. Why do you hate this company?
No, like I said, it's not personal, and I don't hate anything. It's a stock call, number one. No, if you look at Intel, obviously on the surface, look, they're a behemoth. They always are, and they have a tremendous amount of resources to deploy when they're in a situation. They are in a situation, though, right now. I don't think anybody denies that. Obviously, we are in a period where it's undeniable that they're losing share. The question is how much and how quickly. It's undeniable that gross margins are coming down. They've been supporting earnings on the back of cost cuts and buybacks, right? And they've been benefiting from a market environment that has been incredibly strong, to their credit, but that feels temporary. A lot of that is due or has been due to the Windows refresh, which is coming to an end, potential pull forward in front of tariffs, which, if there was any, is coming to an end. And then, again, they're not the only one. Nvidia's not the only one that's been benefiting from a server refresh cycle. They're benefiting from that as well. I think a lot of that like plays out in the first. And by the way, I'll put coronavirus aside because we'll see what that may do to this. But they have a very strong first half as sort of their supply constraints ease and they're able to sort of fill into the channel. The second half looks quite weak, both on a revenue as well as a margin basis. They're actually guiding the second half down over the first half. The only other time that ever happened was in 2008, and it sort of shows you the magnitude of kind of the pull forward that we've had and where it's going. And we know margins into next year are just going to get worse and worse as the increased capex as they're fighting with TSMC starts to build into the gross margin profile. Competition gets worse. Structurally, I think the situation gets worse from here. We'll see what the demand environment does. We'll see what coronavirus and everything else does. But in the meantime, I think fundamentals are getting worse. They've been supporting from other things, non-fundamentals, whether it's buybacks and that sort of thing.
Stacy, we got to continue the conversation after the second quarter. This is just too good. We're at opposite ends here.
Have me on. I'll be there.
Stacy, we appreciate your time. We'll talk to you again soon. Just to reiterate as well, just so you're all clear, Stacy does have an underperform on that stock and a $50 price target.